Good morning, everybody. Welcome to the Live Market Open. It's Wednesday, May 4th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Hope everybody's doing great. As usual, we'll cover what's going on in foreign exchange markets, recent developments, various charts and levels, the next 24 hours, and of course, your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? So yesterday we had what many call in markets a turnaround Tuesday. So the US dollar extended its losses. We had quite significant levels in euro dollar, dollar yen, and other currencies, and then it made a total comeback. It made a full turnaround. One of the reasons cited, at least for the continuation of this move, is that Fed officials talked about June being on the cards, but they did warn about Brexit. I don't think June is on the cards. They did say it's, of course, data dependent. They did say that they have to wait to see what's going on with the Brexit, and we know that the vote in the UK is only held 1 week after the Fed decision. We know that data for the second quarter is not so good. But anyway, John Williams, that worked with Janet Yellen at the San Francisco Fed, said that June is certainly a live option and he would like to see a hike. It's not really news, and it came after the initial dollar turnaround. In addition, Dennis Lockhart of the Atlanta Fed said it's a live option. I think also, first of all, the comments came afterwards, and secondly, I don't see a hike coming. Anyway, let's go back to what we had. Let's look at the charts. So this is euro dollar, quite an impressive rally yesterday. Yesterday when we began the show. Good morning, Ed. Good morning, JM, Roland, everybody. Anyway, we had it settle above 115, and then we had a surge all the way up to 116.20. Okay, quite an impressive move, and then quite an impressive drop. We went all the way. Now we're battling the 115 level once again, so we already had euro dollar dropping under 115. So we can add the 116.20 as resistance here. At least for now, it's at least the high level of this year, high level of 2016 at 116. 116, even 16 if you wish, to make it more headline friendly. Good morning, Jake. Good morning, Fabian. But anyway, it's still under the August 2015 high of 117.12. Now we're currently battling the 115 level. Also, we had a similar phenomenon with pound dollar, even a sharper move. Some call the pound the devil's currency. Anyway, we had poor manufacturing data. Manufacturing PMI came out worse than expected. That also pushed the pound a bit lower. I mean, added sort of fuel to the fire, especially when the US dollar was on a roll once again. So we had the pair rise to a high here of 147. 147.75. Okay, but then we had a sharp fall. We're back under the 145.80 level we mentioned in the past, and you can see how it separates ranges. Okay, not all the time, but now we're currently back to the lower range of 145 to 145.80. Okay, still higher ground than we've seen beforehand. Okay, because if we zoom out, we see that the pound is still higher. In general, the dollar is still weaker than it was before the Fed decision, before other things, but it made a significant turnaround. For pound dollar, it's a 200 pip move. Okay, dollar yen. Also here, we had dollar yen falling to 105.50. Also here, making a big turnaround, crossing the 107 level. This move. Remember that the Japanese stock market was closed today, but nevertheless, we still saw some of the moves in the Asian session. I would say that we're seeing now a phenomenon of the US dollar against all the rest, okay? So it's not risk on, risk off. Yesterday we've seen the dollar strengthen alongside stocks, alongside the drop in oil prices. In these cases, you would see the dollar strengthen, but the yen strengthen even more. And until a few months ago, we've also seen the euro enjoy these safe haven flows. Not anymore. In recent days and recent weeks, sorry, we're seeing the US dollar against the rest. Either the US dollar suffers against everybody or gains, okay? The world is much simpler once again. Let's hope it continues. Anyway, with dollar yen, we made it above 107, currently back down. 106.76 current level, 106.50 is the low for the session. We didn't reach the 107.65, which worked very nicely as support before the recent plunge, before the Bank of Japan's big disappointment last week. Okay, dollar CAD, also here we've seen support at 125. It was temporarily broken, temporarily breached. We reached 124.60, but only to make a big turnaround all the way to the previous resistance line of 127.50. Look how 127.50 works as support right here, back in the middle of April, then worked as resistance. We fell all the way down, and now it works once again as resistance. Support is at 126.30. Okay, so quite interesting technical moves on dollar CAD. Aussie dollar suffered a rate cut yesterday. It seems like a long time ago. So before the rate cut, I'll remind you, there were rumors that we will not have a rate cut. It was sort of a binary event. So he went all the way to 77.20, only to fall down. Then we had a weakening of the US dollar, and we've seen a recovery attempt by the Australian dollar, but only to fall to the lowest levels in a few months. We're back to currently 75.14, but we already fell to lower ground under 74.80, which was a line of support. Yeah, okay, here we are. So, yeah, sort of a dip to catch some, to do some stop hunting. But anyway, the Australian dollar remains a bit depressed. Kiwi dollar, here we had some data from New Zealand, an employment report. Also here we had it move very nicely to resistance at 70.50. Look what an impressive double top. I always say this, Canadian dollar, New Zealand dollar, and to a lesser extent at this time the Australian dollar, I'll enjoy better technical behavior in many cases than euro dollar, and they're worth watching. Look at this nice double top. Look at support here at, well, 68.80. The fall in the Kiwi dollar is mostly related to the US dollar's strength, because well, we had milk prices falling in New Zealand, but on the other hand, we had an employment report which was not that shabby, not too shabby. Dollar Swiss, we'll cover the events we had yesterday soon. I want to complete the charts, and I see we have questions as well. So dollar Swiss, well, moving with the dollar, we fell to very low ground yesterday to 94.40, almost there. And then we had a big turnaround. Now we're sliding once again. So dollar Swiss reflects the mood of the dollar more than anything else. Okay. So we're at, yeah, 95.46. That's quite a messy pair. Euro Swiss, as usual, that's where sort of the action or lack of action, and that's what the Swiss authorities care about. We're around just under 110, very, very narrow ranges there. Euro Pound, here we've seen a 79.30 line work very nicely once again. We had the pair falling all the way from the highs of 81.20 to 77.40, the veteran line. Then we've seen it climb back up. So 79.30 was resistance, well, some time ago. Let me zoom out just a bit more to show you. Also, euro pound, contrary to euro dollar or pound dollar, has a better technical pattern. So 79.30 was top here, then worked as support right here, and now once again as resistance to a move to the upside. We're seeing the euro gain more ground than the pound. The pound suffered more because of a Brexit. I see Ed says that the Brexit vote is not legally binding. It takes 2 years to exit after signature and can't be retraced. Yeah, Yeah, it's worth clarifying this point. It takes 2 years to get it fully done. And of course, we might have new trade agreements, new immigration agreements, new movement agreements after a potential Brexit. Okay, so it's not, all in or all out for the UK. The UK already has some opt-outs, so it won't be going from total full membership to being in the desert. It'll be from close to full membership, but with opt-outs, to a process where things are renegotiated and agreed upon. But markets move according to expectations, not according to the actual details on the ground. So if we have now the current certainty, the current devil that we know with the UK membership of the European Union, and then we have a Brexit, we have lots of uncertainty about what these negotiations will result in, what will be the status of the City of London, access to product markets, services, free movement of people. I'm living here in Spain already 5 years. The biggest community is of Brits. Okay, there are estimations between 700,000 to 1 million British citizens living here in Spain. Okay, what will be their status? Some of them want an Irish passport. So for markets, for the short term and the medium term, the pound will enjoy better hope and then an eventual vote to remain. And the pound will crash on every opinion poll that shows a higher chance of a Brexit or, of course, an actual Brexit. I think the chances are low, but the level of uncertainty has a lot of impact. If the Fed says it out loud, you can say about the Fed that they're looking for excuses not to raise rates, but I think that there is a genuine fear that any kind of... Europe is already in economic trouble for quite some time. If we have another factor and also a chance of a breakup of the European Union, the beginning of the end, it's a big factor of uncertainty also for the United States, also for China. So something that began as an attempt by David Cameron to woo voters of the right-wing section of his party and UKIP voters could already has a global impact. Okay, anyway, let's go back to charts. We have a few more to complete our morning round. So we've seen Euro Pound, as I said, under resistance there. Euro Yen, here we're seeing bigger crash of the yen. We made it above 123 but didn't hold up there. 121.86 works very nicely as a support. Okay, pound yen also here. After the big surge of the Japanese yen, we had some recovery, so we're higher on this pair. 156.60 works very nicely as resistance. Low support 151.80, but 154 is further support. Yesterday, worth mentioning in the context of the Canadian dollar and in general, we've seen oil back down. Had some news that Saudi Arabia is reaching record oil output, not really news. We had news there from the API Institute about a rise in crude, a drawdown in gasoline and distillates. So today we have the more important release, the crude oil inventories by the EIA. Anyway, we're still on relatively high ground, but under 44.50, which capped the pair towards the end of April. And 43 works as some kind of support. Of course, we're talking about WTI crude oil. For today, the range is a bit limited, but we'll probably have bigger movements later on. Okay, so that's the roundup of charts. Let's go back to euro dollar. So what we're seeing this morning is a very small reversal of the big US dollar reversal, the big US dollar comeback. So we're seeing some recovery of many currencies against the US dollar, but it's very limited in comparison to the big turnaround we've seen yesterday. Lucas says, good morning. Some funky yen spikes overnight. Funky yen spikes. One of the reasons is that the Japanese stock market was closed. It's the Japanese Greenery Day, if I'm not mistaken. Anyway, that could explain. I mean, the lack of liquidity could explain the moves. What I'm seeing is that we didn't break above 107.65, so The yen still remains strong. The lack of action from the Bank of Japan. There were reports that they're about to introduce more broader negative rates. That means applying negative rates to bank loans, or basically paying banks. That was 1 week before the decision. That's why we've seen the spike here to nearly 112. And then we've seen when the Bank of Japan did not act a few days later, less than a week later, we've seen this big surge in the yen, the big fall in dollar yen, the big fall in all Japanese crosses. I would blame these funky moves again on low liquidity. Perhaps you can blame it on I don't know what we heard from Fed officials, but yeah. Anyway, it was a very short-lived move. All this move up here to 107.45, and then we had fall back to the previous range, and then another move. So if you look at the bigger picture, we don't see the spike, of course. Well, we do see a bit of it. Anyway, I would blame it on low liquidity. Okay, another comment here by Ed. Impossible to get an Irish passport, even if you marry. Yeah, but there are some Brits with Irish grandparents or things like that. Anyway, and some live here in Spain for a long time, so they can obtain a Spanish passport. Anyway, back to currencies. We didn't talk about events that we had yesterday. So another event that will have more and more impact. So we had the US elections in Indiana, primary elections. Trump won over there, and it's a winner takes it all. And his biggest rival, Ted Cruz, announced he's quitting. He's dropping. I guess he couldn't take it anymore. I'm surprised that Kasich, governor of Ohio, which is far behind Cruz, is still officially in the race, while Ted Cruz, who had a much better chance of beating Trump, well, but still was behind, he announced he's suspending his campaign, or quitting, if you wish. So it's all but confirmed that Donald Trump will be the Republican nominee, something that seemed outlandish not that long ago. And there's, of course, a fear of markets, and I must say I also fear that there is a chance he'll become the president of the most powerful country in the world, and a person that incites violence and is racist, and his ideas are, yeah, outlandish. Anyway, this could have more and more impact because it also seems, despite the win of Bernie Sanders also in Indiana against Hillary Clinton, she's still in the lead. Hillary Clinton is establishment, mainstream, a continuation of Obama, a continuation also of other presidents that were Republican. I mean, sort of the more mainstream, and Trump is an outsider. So it's a clear contest. I mean, it's not fully confirmed, but it's becoming more and more clear that it's going to be Trump against Clinton. It's going to be someone from the outside that against someone from the inside, or if you want, certainty with Clinton and huge uncertainty with Donald Trump, which means that every opinion poll towards the elections, closer to November, of course, but the U.S. election political cycle is so long. So I guess from the summer, from the conventions, we'll have more impact from political events on markets. I mean, if it were something like Marco Rubio against Hillary Clinton, it would have less impact because they're both sort of mainstream. If it would be, but now that we have a clear difference between certainty and uncertainty, it's going to become more interesting. We'll have to see the final nomination process in July, if I'm not mistaken. But today, with the retirement of Ted Cruz, Trump is all but confirmed in the Republican Party. Okay, so it's not only Brexit. Yeah. And yesterday we had officially elections announced here in Spain for June 26th, 3 days after the Brexit referendum, and 6 months after the previous elections, because the parties were unable to form a government. Okay, figures we had yesterday, in context to what we said, the big fall in the pound was, of course, mostly dollar-driven, but also because of weak manufacturing PMI in the UK. So the Purchasing Managers Index disappointed with 49.2 points. This is under the 50-point threshold that separates growth and contraction. That means that this sector is now in a recession, according to this PMI, of course, and there's only one small sector, but it's important because it's the sector that actually produces stuff. Okay, for change in the European Union, in the Eurozone, we had producer prices, PPI surprise with rising 0.3. New Zealand milk prices fell. Let me check out the exact number. Not sure everybody knows, but you can. FX Rate Calendar offers you so much data. But if you want to focus, you can filter out exactly what you want. So do not have it filtered. That's what I'm doing right now to have a focus on events I want to show you. So let's look at specifically for the kiwi. We had milk prices coming out at a drop of 1.4 after a rise of 3.8 last time and the rise beforehand. So this hurt the kiwi a bit. Employment data was a bit more mixed. So on one hand, we had the unemployment rate rise to 5.7. That's bad news, but it came alongside a rise of the participation rate. So more people are participating. So it's actually good news. And the employment change, if you want a better comparison to the non-farm payrolls, but in percentage points, was up 1.2%, nearly double the expectations. Labor cost index went up 1.8%, which will also beat expectations on a yearly basis and also beat on a quarterly basis. On the other hand, wages went up a bit less. Anyway, in general, it was a positive report. It keeps the kiwi bid. Okay, what do we have today on the agenda? It's a very busy day. We did have already the Spanish unemployment change. Let's catch up with the news. So, not so good news ahead of, well, no, it's basically in line, sorry. So it's a very seasonal figure because, tourism plays a big part in the Spanish economy, especially where I'm here in Barcelona. We have so many tourists, even in January. So we had a drop of nearly 84,000 people in the ranks of the unemployed, and that's of course good news, but it's related also to the spring. But just around expectations, just a small miss, but not too bad. We have the final Eurozone manufacturing PMIs, so we already have the figure from Spain, basically in line. We also have the one from Italy, and then the final figures from France, Germany, and the Eurozone. More importantly, at 8:30 GMT, we have the construction PMI. Construction, or the housing sector, was looking quite good. Okay, always the leader in the recovery in the UK, but it also slowed down, and now it's expected to drop from 54.2 to 54 points. Okay, so if we have another disappointment, it could hurt the pound once again. Remember, the bigger mover for the pound is the fear of a Brexit or no Brexit, and of course the moves in the US dollar, but it's still worth noting these figures, which are forward-looking figures. We have retail sales in the Eurozone. They're expected to drop by 0.1 month over month. We already have the figures from Germany, so the all-European figure has less of an impact. Jens Weidmann, the president of the German Bundesbank, speaks at 10:15 GMT. The time you're seeing here on the screen is the time in my time zone, of course, which is Central European time, and 12:15 or 11:15 in the UK. And then we have the bigger events for the day. We have the big hints for the non-farm payrolls on Friday in the United States. So first of all, we have at 12:15 GMT the ADP employment change, or ADP non-farm payrolls. It's only private sector, but of course it's very important. We are expecting a smaller rise than last time, so a rise of 196,000. Basically, it's in line with what we've seen. Job gains, as we know, are looking good in the United States, very steady. The problem is inflation, wages this time. So ADP, even though the correlation is not always 100% clear, it still shapes expectations, okay? Then we have the trade balance in the United States. We recently received another figure, the goods trade balance, which comes out before the general trade balance. So it has a bit less of an impact, but still we're expecting a narrower deficit from 47 billion to around 41 billion. We also have the trade figures from Canada and expected to show a deficit as well. As always with trade figures, the bottom line figure is not the only one we should note, but also the level of imports and exports. In any case, it's the bigger events are the ADP and the ISM non-manufacturing PMI, but we also have non-farm productivity and unit labor costs, which is related to inflation. So last time we had a rise of 3.3 and a similar rise is expected this time. I think together with ADP or even more than ADP, we have the ISM non-manufacturing PMI, long name basically for a view on the services sector, which is the vast majority of the US economy. And we should note here that it's looking better than manufacturing, but also here, like in the UK, it's slowing down. It was already closer to 60. Now we're expecting a small rise from 54.5 to 54.7. It has many components, new orders, which is more forward-looking, prices paid, which looks at inflation, and the most important one for the non-farm payrolls is the employment component. If it moves to the upside, it's good news. If it moves to the downside, it's bad news. Okay, so it's a very busy day. Well, should mention also factory orders, overshadowed by the ISM non-manufacturing PMI. After a drop of 1.7, this time we're expecting a small rise of 0.6. We know that the manufacturing sector is not doing that well. So, anyway, it'll be overshadowed by ISM. And as I mentioned before, we have the crude oil inventories, expecting a smaller build in inventories of around just under 1.5 million barrels. It can impact the mood, but today we have much more important figures from the US ADP and the ISM non-manufacturing PMI. Okay, I see a few questions here, but I'll complete the figures also for tonight. We have retail sales in Australia expected to rise. It's released at the same time the trade balance. Trade balance shows a deficit. Retail sales are expected to rise. As always, we need both figures to go in the same direction to have a significant impact on the Australian dollar. That's at 1:30 a.m. GMT. And from China, we have the services PMI, less important than manufacturing, especially for Australia, but still worth noting. It's an independent release and bigger rise is expected there. So that's it for the events for today and tomorrow. Covered everything. See here a few questions. Perhaps Ed says perhaps something really bad is going to happen in the USA, so Trump will be the fall guy. Only the USA can actors or comedians become president, but Constitution states you must be born in the USA to qualify. That's why Arnie the Terminator couldn't run. Yeah, the political system in the United States is not perfect, but yeah, you have to be born in the United States, but you can say the most outlandish things and also get elected, but that's democracy. Anyway, comment from Luca, the Aussie took the 74.90 major support, headed down now. Seasonality has it that May is a very bad month for commodity effects, usually because it's bad for stocks too. There's a saying in markets, sell in May and go away. I would attribute what's going on in the Aussie to data related to Australia. So it's basically the fall in in inflation, and that triggered a rate cut in Australia, and that's what pushes it lower. Regarding the exact line of support, well, yeah, it could be 74.80, 74.90, 75, but in any case, we're at the lowest levels since the middle of March, so we did fall under support, and we already traded at 78.40. Okay, so undoubtedly we're in the scratching the bottom of the range. In terms of commodities, yeah, we're also seeing a drop in oil prices, but we're seeing the drops. Yeah, we had a very strong April for iron, for copper, for oil. Now we're seeing a bit of unwinding of that. We've seen also correlation between oil prices and the Australian dollar, because all commodities and commodity currencies are correlated. So maybe to see a confirmation of the breakdown, which we haven't seen yet in the Aussie dollar, we should watch out for the crude oil inventories release, and also, of course, for US data. Anyway, further support at 74.40 and 73.75. Okay, the Australian dollar, usually one of my favorites, is a bit more choppy than it used to be. Okay, I find the Kiwi dollar and the Canadian dollar to provide more a better technical behavior. All right. Yeah, seasonality. Yeah, on the upside anyway, we have 75.33 as weak resistance, and then 76. Okay, more questions? Let's see if we have a change in expectations for a rate hike in June. Not really. So it's 15%, round numbers here, 15% chance for rate hike in June, according to bond markets. Again, we heard some Fed officials talking about the fact that, well, treasuries are priced too high. That means that that we could see that they're exaggerating in expectations. We've seen them talking about June being a live option, but they always say that every meeting is a live option, and they always say that it's data dependent. The data so far doesn't imply a rate hike. The uncertainty about a Brexit also does not imply a rate hike. So the dollar was, I think we talked about this yesterday, that yes, there is a reversal, a justified reversal, because the expectations for rate hikes are lower. So the sell-off of the US dollar it makes sense. But the magnitude that we've seen, at least yesterday and also on Monday, was a bit exaggerated. So it makes sense to see this reversal of the reversal, correction of the correction, if you wish, and to see a stronger US dollar. Also quite a volatile move. At least we have very volatile markets. It's not always the case. Okay. Yeah, any more questions? Let's talk about other events we have this week. Of course, as always, with the first week of the month, it's quite busy. So on Monday, let's remind you, we had the ISM manufacturing PMI in the United States. It came out a bit worse than expected, still showing growth, but not too much. Draghi talked on Monday. He said nothing related to monetary policy, but he did continue the battle with governments. It's not unilateral. Also, the German finance ministry criticizes Mario Draghi and the ECB, even though it's a member. Well, Germany is a member of the ECB. Tuesday, we had the Australian rate decision. Some saw it as a surprise. Of course, nothing was priced in, so anything would have been a surprise. We had a rate cut in Australia to a new historic low of 1.75 that hurt the Australian dollar. We talked about that right now. Chinese PMI, manufacturing PMI, came out a bit under expectations, but not a total disaster. Today, the focus is on the United States of America. ADP non-farm payrolls, ISM non-manufacturing PMI, key hints for the NFP. And on Thursday, tomorrow, well, we do have quite a few events, but nothing really huge. I would say that the services PMI from the UK would be the main event for tomorrow morning, but of course we'll discuss tomorrow. And on Friday, we have, of course, the non-farm payrolls and the Canadian jobs reports. Yeah, and Ed says here, I found the holy grail of how to trade the news. Don't trade it. Yeah. Okay. Of course, if you focus only on technical analysis and you want to not to trade the news, that's great. You just need to know at least one thing: when the big news is released, the indicators. Okay, because when you have at least 8:30 GMT in the UK, it's a time when we have more movements in the pound, and you should be aware at least of the time of the news. Same thing goes for 8:30 Eastern time in the United States, which is 12:30 GMT now. It's a time when we have releases in the United States, and you should be aware of it. And of course, there are many more releases at various times. So I would say that the minimum for those that say price action is everything, technical analysis is the holy grail, just to be aware of when figures are released, because that's when things can go messy. It's especially true, of course, for the non-farm payrolls on the first Friday of the month, and we have technical levels being broken time after time. I mean, some levels are broken only to be afterwards respected. Okay, so it's quite a messy time for markets. Okay. Yeah. Any more questions? Let's look again at the charts. Euro dollar is hugging the 115 level. Very, very balanced on the day, less than a pip to the upside. Pairs to watch, asks Jax. Well, the focus today, well, for the morning, it's clearly the pound because of the construction PMI. Well, morning, I would say the time frame around the release. So it's 20 to 30 minutes before the release, from 8 GMT until about, well, 30 minutes afterwards until 9. So that's the time to watch the British pound. Then we have, I would say also the Canadian dollar because of the trade balance release in Canada and more importantly, crude oil inventories. But as I said, the main focus today is on the US dollar, on the non-farm payrolls hints. So the around the ADP and the ISM non-manufacturing PMI, I would go for the classic major pair, that's dollar yen. Okay, so I think dollar yen is more in focus. We were also seeing the dollar move across the board, and all currencies either win or lose together against the US dollar. The yen used to be a safe haven currency. Let's see if it gains back. It's almost all the time a safe haven currency. Only in recent days it's losing to the dollar when things are not looking good, when stocks are falling, when oil is falling. Let's see if the yen remains at this kind of position once again, or it goes back to the safe haven behavior. If we have bad data, we could see the yen strengthening once again. So far on bad US data, we've seen the US dollar falling across the board, and yesterday it was rising across the board. So let's see if the yen comes back to its role as a safe haven, sort of attracting fears. Is Kuroda sweating? Of course he is, a lot. Kuroda is the governor of the Bank of Japan, for those of you that don't know. He must be extremely frustrated. They clearly want a weaker Japanese yen to support exports, to raise prices, inflation of imported goods. They're not getting it. They set negative rates. It was a historic move in January, if I'm not mistaken, only to see a short-lived drop in the yen. Since then, things are only becoming worse. In the last 2 weeks, they had this report about the Japanese authorities introducing more stimulus. That didn't happen. The yen strengthened further. On the other hand, they're pressured by China and more so by the United States not to intervene directly in Forex markets. Many analysts see 105 as the line in the sand. Some talk about 100. I say that only when they see that a trend has changed in their favor will they perhaps intervene to give it another push. Okay, but as long as there is no they're fighting a falling knife, an uphill battle. I mean, going against the trend, I don't think they will act because they lost too many battles and they prefer winning, of course. So I hope this answers the question. Anyway, it's time for the wrap up for today. So this is the wrap up for the live market open for Wednesday, May 4th. We've seen a big turnaround in the US dollar. We've seen, first of all, the US dollar extend its losses, higher highs in euro dollar, deeper lows in dollar yen, and also pound. Also, many currencies celebrate against the dollar, but we had a total turnaround Tuesday. This total turnaround Tuesday saw big moves, 200 pips lower in the pound, 100 pips or more, 150 in euro dollar, and also the yen rising. An interesting phenomenon is that it's the US dollar against all the rest and not risk on, risk off with safe haven currencies, not even the yen. Okay, something that is attributed at least to part of the rise in the US dollar, I don't see it as real, is that Fed officials talk about June being on the cards. It's a live meeting for a rate hike, but they still warn about Brexit. I don't see them raising rates. And political news, Trump is all but confirmed as the Republican nominee. It's a clear choice for Americans and for markets, making it an easy choice. Clinton is the continuation, the mainstream, the establishment. Trump is the wild card. Markets, of course, prefer the devil they know. Okay, in terms of figures, the fall of the pound was exacerbated by the UK miss on the PMI. In New Zealand, we had disappointing milk auction, the global dairy trade, but unemployment was generally positive. Looking at charts in the wrap-up today, we're seeing euro dollar hugging the 115 level. 114.60 still works as support. 116.20 or 116.16 is the new high. Works as resistance before 117.12. Pound dollar is back to the old range or lower range of 145.10 to 145.80. Dollar yen battling 107. It didn't manage to break above 107.65, which worked beforehand as resistance. 105 is the line in the sand, but also watch out for 106.10. Dollar CAD around 127, reached resistance at 127.50, which is a very clear separator of ranges. Okay. Well, support for the Canadian dollar, 126.30. Aussie dollar still suffering that rate cut by the Reserve Bank of Australia, managing to recover just a bit, 75.10 at the moment. As Luca, I think, mentioned here, 74.80 is some kind of support, followed by 74.40. Kiwi dollar, it reached resistance, very nice double top at 70.50, fell to support at 68.80, now bouncing a bit higher. Today we have quite a busy agenda. Most important events come in the United States. At 12:15, the ADP non-farm payrolls. 12:30, the US trade balance unit labor cost, other figures. And perhaps most important release is the ISM non-manufacturing PMI at 2 GMT. Beforehand, in the European session, we have construction PMI in the UK. Expect significant action, but short-lived for the pound between 8 and 9 GMT. Also worth noting is the Eurozone retail sales and services PMIs. Final figures, crude oil inventories at 2:30 GMT. The biggest impact will be on the Canadian dollar, but it can perhaps impact the full market mood. And at night, another important night for the Australian dollar with retail sales, trade balance, and then the Chinese Caixin services PMI. Less important than manufacturing, but still of importance. So it's quite a busy Wednesday with NFP hands, with waiting for the next moves for the US dollar. Will it continue its recovery, or was it just a necessary correction? I don't have a clear answer about it. I'll be data dependent, well, because today we really have important US figures that can determine the next move. So I would just wait for that. Anyway, June, I don't think it's on the cards. And if there's, even if they use the Brexit event as an excuse, it doesn't really matter. It's I don't see the US dollar gaining too much ground. But anyway, we did see it recovering because the fall in the US dollar was a bit over the top, exaggerated. Okay, so yeah, okay. So anyway, thank you everybody for coming, for the great questions. It's been a pleasure as usual. Wish everybody success and good luck, and we'll be here tomorrow. So that's it for today. Thank you and bye-bye.